Hi, today on the Growth Equation, PE Perspectives and Products, I talk with Harry Taylor of TA Associates. Harry's a partner there, and TA Associates invest in a lot of things, but particularly growth companies and growth software companies. That's Harry's main focus. We talk about several different things, and Harry has perspectives that I think are pretty interesting. Typically, I'll hear from investors that refactors, big refactors are bad or difficult to get approved, but Harry here talks about how they're important and necessary and how to think about them, when to do small ones, when to do big ones. We talk about the nature of CTOs, and he breaks them up into two ways. One is CTOs for growth companies versus startups, how they're different. He also talks about CTOs different for companies that are doing organic growth versus purchase tuck-ins. The interesting thing about there is size matters. Companies with large amounts of product, organically growing them, are very different than product extensions that are tuck-ins. And last, of course, we talk about GenAI and the impact in companies and where companies are investing and where TA is investing. Stay tuned. I hope you enjoy it. So let's just start by talk about TA and talk about how you got into this career. TA does invest in a lot of different kinds of companies. Not all are technology companies. Tell about TA in general, if you could, for a moment, and then what brought you to TA? What brought you to want to be involved with technology companies?
Sure. So TA's been around for about 55 years, and we are a growth private equity firm. So we invest in growing profitable businesses globally. So Boston's our headquarters, presence in London, West Coast, Hong Kong, and India. About 55% of our investments are in technology, which today is mostly software and payments. Historically, we would invest primarily in founder-owned companies, and often we were the first institutional investor. As private equity markets matured and our funds have become bigger, often there are other investors that have invested in the company previously, whether that's a venture capital firm or another private equity firm. But we often still invest in founder-owned companies. We'll make minority investments, co-control investments, and majority investments. So we say we're ownership agnostic, but we're always very active with our companies. So we're not passive investors. We like to be very involved working with the management teams.
So you've been doing this for a bit of time. What have you seen change? I mean, obviously there's GenAI currently changing the world. Cloud computing changed the world. Have any of the significant technology changes changed the way investments work fundamentally? Or is the model really the same through these different kind of technology earthquakes?
Yeah, no, good question. I mean, clearly, a number of years ago, most of the software companies we invested in were license and maintenance models, so on-prem software with maintenance. Now, most of the companies, a lot of the companies we invest in have a combination of still some on-premise, whether that's sold through a license model or a subscription term model, but then obviously have a cloud product and often migrating customers or primarily investing behind the cloud business. GenAI, that's something that every company obviously is trying to figure out how it benefits or could be a risk to their business. And we're seeing, every company do something, but candidly at this stage, most companies are still, I would say, at different levels of experimentation, of seeing benefits, whether that's on the R&D side, on the efficiency side, or on the revenue product side and selling to customers.
I had this conversation with a partner at a different firm where I had proposed in the GenAI world, there's three kinds of companies, and he proposed three others. So I'm interested in your take. I had said There's GenAI for developer productivity, the Copilots of the world.
Yeah.
There is GenAI for internal IT, infrastructure, expediency, efficiency. And then there's product line extensions. And he had said to me something that I really should have had thought of before. Well, he said, David, you missed the infrastructure stuff, the NVIDIAs of the world. He said, you missed the companies that help other companies use GenAI. How do you label data, that kind of thing. And then the productivity suite around just the process of fielding GenAI, collecting data, monitoring you could call it the QA process. Does the world look like that to you? Do you have modifications to that?
No, I think that's a pretty good way to, broad strokes and swim lanes, a pretty good way to look at it. The first three that you mentioned is absolutely at least how we're talking about it, how our companies are talking about it. And as I said, I think different companies are seeing benefits. I think probably more benefits in the first two buckets so far. And in the process of, rolling out product extensions and customer benefits now, right? But I feel like less developed today than the other two swim lanes.
So let's jump into the world of the CTO and Chief Product Officer. How they talk about their products important to you in investment, important to you post-close. Let's start there.
Yeah, absolutely. And a lot of our companies, I would say, I don't want to say all, but 90% of our companies have a product portfolio, right? And it's not a single product company where it's one product that we're selling. And a lot of companies have, before we got to them, have grown through acquisition, right? So they've got some products that are their go forward products, some products that are more in maybe maintenance mode or converting the go forward product. And as I mentioned, we invest in growing profitable businesses. So there's not an unlimited, IT spend and product development spend. So for me, the best CTOs and CPOs are the individuals that can make trade-offs, right? Because it is about trade-offs and where are we going to place the bets, so to speak, for growth and for taking our customers forward. And where do we have to make some trade-offs on products that we certainly want to support customers well, but are not the growth initiatives. And so being able to frame what the product portfolio looks like, being able to allocate clearly, where are we spending dollars and where are people allocated as an onshore or offshore, and where are we placing the growth investments to achieve the growth that we want in a clear and defensible and concise way, knowing that we may not be done making acquisitions and we're going to have another product portfolio, another product into the mix, and that may be complementary, not necessarily overlap, but it's usually a very complicated set of decisions as to how to organize the R&D staff and where to allocate dollars.
So that's interesting. It sounds like some of those decisions are based on product impact. Sometimes the CTO comes and says, we've got to refactor this set of things. And how would you like them to communicate that? Because that's a difficult decision when a CTO says, I need 4 months to do nothing but fix things and you'll get no impact immediately. That's a hard thing to say yes to. How do you like to have that conversation?
Yeah, and it happens a lot where we may have to make a big platform investment that we know is going to be a big investment and it's not going to yield any financial gains in the near term. And, we in working with the team have to map it out very clearly of what are the risks of not doing it, right? And of saying, just keep the status quo, and what are the benefits economically to customers to future product expansion if we do make the investment, and then we talk about what's the timeline of the investment. Should we be investing more upfront, as I'll call it a sort of a surge investment to get there more quickly? What would that take? Can we actually do that, or do we do it in a more moderate pace, and that's okay, and we're comfortable with that? So that's a conversation we have all the time, especially, as I mentioned, if you have some products that have been around for 30 years and are key products that companies run their businesses on. You certainly can't, you've got to make sure you continue to invest in those, but we may want to be investing in those, but also knowing that we're going to be investing in the whole underlying platform. And as you know, sometimes it's not the big bang. We're just going to rewrite the whole platform. Sometimes it's incremental, and we have those conversations all the time.
Yeah, I worry about the CTOs who go and say, "Hey, we want to do this big bang thing, and I want 6 months to do nothing else," because that's not easy to say yes to.
And sometimes it's multi-years, right? It's not 6 months. Right. It's this is going to be a 3-year journey, and those are candidly the harder ones to decide. And sometimes many times we've said, "Yep, we understand," and we understand that thesis coming into the investment, that we are going to make this big investment, or the company's already down the path of making that investment, and we factor that into our underwriting case and the expense case and the margin profile, and then hopefully in what that's going to do on the other side in terms of revenue growth.
So what are the attributes you like? We'll do CTO first, then Chief Product Officer. What are the attributes let's say you in a portfolio company, it's post-close, the last CTO is not there for some reason, you're going to hire a new one. What's that person look like?
Yeah. I think it's someone that, and I think to your point of having this conversation, can sort of we have to all be aligned of what are we trying to do with the business, right? With both the investment, but what are we trying to do with the business, with our customers and the market? Where do we need? And having that framework, and then saying, okay, this is what we're all aligned to try to do. What does that mean for our product investments? As opposed to just, I want to come in and build this great big thing, and having the full perspective and being able to look at it from both the technology side, but also the financial and market and customer side, I think is critical, because that you can be much more, I don't want to say pragmatic, but much more balanced on understanding the full holistic view of what we're all collectively trying to do when we come into an investment.
That would imply to me that a good CTO has a good product sensibility, good business sensibility, good financial sensibility as well. Does that map?
That definitely maps for our types of companies. That maps 100%. I'm not suggesting that in a startup world that may be different, right? It may be all about the product. In the companies that we invest in, that definitely maps.
What about CPOs? Do they look different? They look the same as far as those attributes?
I think they look similar in that sense that they also have the holistic picture, and I think that they can best CPOs can work obviously very well with the CTOs, right? It always works well when they're very much aligned, right? Of vision, of strategy. I've certainly seen situations where they're not totally aligned, and that that creates some issues. So I do think they're similar characteristics of, at least from my perspective, of when it all works well.
So a CTO can become a cost center. So the kind of structure, if the CPO is putting together the product roadmap, and everything on the roadmap is a bet, some are going to work and some may not work, but we're thinking them as a series of bets, and the technology group, the engineering group, job is to execute, make them look like a cost center. That's a kind of dangerous position to be in, especially if you have a big number associated against your budget. Uh, do you see that as a problem? And if so, how do you avoid it?
Yeah. Yeah, I think it's a problem. If the CTO feels like the investors and the company views that organization as a cost center, I think that's a big problem because we're a tech company, right? It's not a cost center. It's the lifeblood of what we're investing in. Obviously, you need to execute on go-to-market and marketing and everything else. But if you don't have the right product and the ability to execute on the product roadmap, then everything else is kind of moot. So we certainly never try to position the CTO as the cost center. I do think the CTO, needs to live within a cost constraint that we all come up with. What is the budget? And I think the forward-leaning, the best CTOs are those that can say, okay, I've got X number of dollars. I'm aligned with what we're trying to do. How do I position my R&D staff most effectively to get the most out of those dollars? And that could be, we've got 100% onshore now. We can move some offshore and not offshore, like kick it over to the offshore and they're now the cost center, but having an integrated team of different resources to get the most out of the dollars that we can spend. Because again, we are growth investors. We don't come in and say, how do we just maximize EBITDA and keep revenues? We want to grow the top line. We want to put out good products. But there are constraints that we've got to operate under. Everybody's got to operate under.
Right. Yeah. I tell companies this all the time. You'll never have enough money. You'll never have enough people. So the question is, what do you do?
Sales will never have enough leads. It's like, it's all got to work in certain constraints.
Right. And by the way, congratulations. That means you have a big market you're attacking. If you finally find yourself in a world like, oh, we've solved all the problems.
Right.
You're probably not growing.
Right.
Yeah. So does data science fit into this differently? Does data science fit under engineering? Do you want it to be separate in this, with GenAI and stuff like that coming? How does that change?
Yeah, it's a good question. And we have, Will PA has data scientists that we'll use a lot of times on, and analyzing like customer trends or pricing, and that's more outward facing. But we'll also have data scientists within companies, and they do tend to sit underneath the CTO, maybe a separate pocket because they're focused on a certain initiative. But often it is. I've seen both, but often it is under the CTO.
Do you think that world changes now with GenAI becoming important, or maybe does it change for some kinds of companies and not others?
I think it does change, and I think it changes, and in some ways it doesn't. I think each company, and I think this is very fluid because I think companies are in different stages of understanding the impact. Companies a lot of our companies are saying we're going to spend X amount on these data science, AI initiatives, and not to say you ring fence that, but we are, because it's dollars that we weren't necessarily spending 5 years ago, right? So if you're growing your R&D budget, but now you've got this different pocket that we know we want to allocate resources to. But at the same time, we need to keep the other initiatives going. So as we go through budgets, each year, we're certainly talking about how much people dollars are we willing and want to spend on certain initiatives. And obviously, if those are, especially on the efficiency side, the hope is you spend money there and you're getting efficiencies elsewhere. You could not necessarily save that money, but spend it to something more productive. Or we're going to allocate more dollars because we're seeing those benefits. So I do think it's fluid. At least it has been over the last 18 months or so.
What kind of industries are you seeing GenAI sprinkled amongst the existing products? So making existing products better versus creating new product lines that upset, change existing markets, create new potentials. Do you see different markets like that, or how does that look?
Yeah, I think in companies where there's a workflow element or a document processing element, we're certainly seeing AI have a big impact on what we can, incorporate into products that we can now provide to customers. That's been a big area. On the security side, we've definitely, and that's really maybe less offering to customers and more on the back end of making our security products better. That's been a big push. In some of our non-software businesses, if there's manual processes of claims administration, to pick an example, certainly seeing AI have a big impact there of becoming more efficient.
Let's go back to the relationship between CTOs and chief product officers and investors. You have a fund with a lifetime of the fund. Maybe it's 7 years, maybe it's 10 years. You invest in a portfolio company, maybe you have 3 or 4 years left in the fund. Is that something you want your technology product executives to think about aligning against that? Does it matter? Does it not matter? What are the implications for them?
Yeah. The fund itself, I think of it more as typically we invest in a company for 4 to 6 years. However, if we sell the company, or when we sell the company, it's not like you make the investments up front, hope it works, and then you stop making the investments. So I feel like the CTO, it actually shouldn't change a lot in terms of the life cycle of the investment, with the exception of potentially what we were talking about earlier, the big multi-year replatform. If you're on we may still, if you're on year 5 of the investment, you may still do it, but that you're making that investment and you probably won't see the economic benefit of it, but the next buyer will benefit from that, and that could turn up in in a multiple that they're willing to pay for the business, because you've already. We look at companies, and if you see the R&D line has been cut or has been flat for a number of years, and you're doing customer references and you hear, geez, product's a little stale, it impacts your view of the valuation, because the company's been underspending and you're going to have to take on that burden and try to catch up, as opposed to a company that has continued to spend throughout the life cycle of the investment, and you're stepping into a business that is planning for the next 5 years, as opposed to, there was investment for the first couple of years and not much since. So I do feel like on that side it's very, very continuous. You want to keep innovating, keep spending, as if, we talk about these forever businesses. We want to invest in forever businesses. We may only be investors in them for 5 to 7 years, but we're not looking at it as that's the end of the company, right? It's got to we want to keep thriving.
Yeah. Otherwise, the buyers, it's not attractive for the buyers. Yeah.
Right.
Yeah. Interesting. We frequently see an unfortunate situation where CEO will come to us, a board member will come to us and say, we keep putting money into product management engineering and we're not getting more out. How often do you see something like that happen? Clearly don't name any companies, but how often do you see things like that happening? And if so, are there common problems that you see? We see common problems, but are there common problems that you see in there? Those kind of.
Yeah, that's a good question. It's happened. We've seen some times where we've tried to we've invested in a product extension. So maybe it's a new product that's related. We feel like we can cross-sell the product.
Yep.
And, we make the investment to develop it, takes a year or so. And you don't see it resonate in the cross sell, or the market take up is not as good. And I wouldn't put that on the CTO. The R&D group did what we asked them to do. We may have just gotten it wrong on the market appetite or our ability to sell the product. Generally speaking, those wouldn't be, they're not bet the company kind of investments typically. They're more incremental, but they're definitely we always look at, and I'm sure you see, what percentage of your R&D dollars you're spending, keep the lights on, incremental and growth initiatives. And so there is you obviously love the growth initiatives to be as high as possible. But that's probably the most frequent misallocation of dollars, is maybe we got the market demand wrong.
Yeah, it's interesting. Yeah, McKinsey's got the 3 horizons model exactly against that.
Yeah.
Right. It's just, here's the cash cow stuff. Got to keep going. Here's the stuff that's new and growing, that's some kind of proven attraction to the market, and then the R&D. And balancing those 3 is, well, there's not a formula that works all the time.
Yeah. And they may be different over the course of the investment, not because of the time of the investment, but you may feel better about the keep the lights. There may be more investment needed for the keep the lights on, because there's key things that just have been neglected and you've got to do. And candidly, the customer may not even notice, right? If you're bulking up security, you're doing, and then there are times when you feel like that's in decent shape and you can allocate more dollars to the growth initiatives.
The CTOs and Chief Product Officers, where you buy a platform and you're doing a bunch of tuck-ins,
yeah,
those CTOs and Chief Product Officers look different than the ones that you're growing the product organically within the confines of the company, or all companies are both, and so it's exactly the same.
No, I think it differs a little bit on the scale of the company. So we invest in both, I wouldn't say small, but smaller, really high growth businesses where I could think of one I work on where we identified coming in that there was not a gap in the core product, but there was clearly, we get all these references, and there was clearly one aspect that we did not offer that was a key reason for customers to churn. Basically, agent or agentless offering. And we knew, going in, that was going to be we were going to develop this internally. And we recruited a CPO and a CTO because they didn't exist. They existed at the company, but not today. We needed to upgrade to do this. And so that was maybe a different profile than if we invest in a business with several hundred million of revenues, and it's more of a product portfolio approach. And of course, you're introducing new products, but it's more extension of product as opposed to building something brand new.
So do those CTOs and Chief Product Officers look different for the ones that are building it internally versus the ones that need to be able to integrate external purchases to fill gaps?
Sorry, break it up a bit. I wouldn't say it's also a function of just the size of the company and the skill sets that's required. Yeah, for that role.
So what do they look like for a smaller company or bigger company? How do the roles change for you? How do you want them to operate differently, or what are the attributes that change?
Yeah, I think at just this broad generalization, at a smaller company, generally speaking, I think the product portfolio is smaller, right? It's more focused. There may be 2 or 3 key products. In a larger company, you may have 20, 30 products. May have fewer product families, but a number, many more different products. And so the complexity of managing those products and, again, making those trade-offs, I just think changes. It's neither good nor bad. I think it's just a different skill set.
Got it. So a company's out there looking for investment. How do they find you? First, what is that company that you want to find you? You said to talk about growth, profitable growth. You mentioned some things like that. Are there other things that you want a company that fits in this frame? Like, call me a TA. What do they look like? Let's start.
Yeah. So hopefully we find the company. We're making 6,000-7,000 calls a year. We're meeting with thousands of companies, and we make 30 investments a year. So we're very active on our pipeline and outreach. We talk a lot about high quality business models. So and what we mean by that, we want high quality business model, we want growth. By high quality business model, we spend a lot of time looking at retention rates. So to us, it means a lot if the retention rate of a customer is very high, and so that's 90% plus retention rate. And us, that it could be a very small company, but if the retention rate's very high, it just highlights to us how critical it is to its customers to run their business. And so that is, we don't want a company that's got a very low, may have a high growth rate, but a very low retention rate. And so every year you got to go fill that bucket to go grow more. To us, if you have a high retention rate, it also means you have the right to sell them more products because they're clearly like your product, use your product, and hopefully that means you can sell them other products. So we look for high gross retention, net retention, growth, and then we do like businesses that are profitable, and by profitable, our average EBITDA margins over 30%. So not just break even, but show that they can run the business very profitably and with really very little CapEx.
Yeah. So if someone wants to get a hold of you, what's the best way?
Yeah, we're on ta.com, and we can email us. We don't want to think. We don't get too. We obviously look at the size of the market, and clearly big markets are, but we don't shy away from something that may be viewed as a small market if the company is a leader in that market. It's not a prerequisite that it's this massive market for us to invest.
More SaaS businesses than anything else?
Yeah, absolutely more SaaS business. However, we really do look at, because so many of our businesses have been around for a long time, certainly many companies in our portfolio have this combination of on-prem, and I won't call it legacy, but it's on-prem software that customers have been using for dozens of years. And then often that there's that revenue line, and then they have a SaaS revenue line that's growing very nicely. And typically the investment thesis is that SaaS revenue, those SaaS products are going to grow very quickly, and maybe that maintenance base, the on-prem, will be more muted.
Okay. Well, thank you. Thanks a lot. Appreciate your time.
Oh, my pleasure.